Welcome back, everyone. I hope you're having a great day. And in this video, we're going to discuss 5 stocks that you should have on your watch list for this upcoming trading week. We have a very busy week ahead with some major earnings reports from the country's leading retailers, some big tech events and developer conferences, and a very anticipated product launch coming out later this week. So we're going to discuss all the companies who may be impacted from this news, and if you're new to the channel, every single Sunday, we discuss the major upcoming events over the next few days and the stocks that may be impacted. So that may be earnings reports, investor presentations, different product launches, or any event that could impact the share price of a specific company. So in this week's episode, we have 5 different brands from the retail sector, a big tech name, and a consumer company as well, all having some major events over the next few days. And before we jump into that first company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first company we're going to go over today is ticker GOOGL, which of course is Google. They currently trade for $2,278 per share, and over the trailing 12 months, they are up by 68%. The company is valued with a current market cap of $1.54 trillion and trades with a forward PE of only 26. And for a company as strong as Google with major growth ahead, this forward PE I believe to be very attractive. And over their Q1 report, they showed incredible growth, and their total top line expanded 34% year over year, and they crushed analyst expectations for earnings per share. And why they're included in this week's episode is because the company is hosting their I/O conference on May 18th to May 20th. So it's a 3-day completely virtual event that is highly anticipated for the developers and tech investors in the industry. This event was canceled last year due to the pandemic, so it's been a 2-year gap, and we're really looking forward to finding out what Google's been working on. And on the company's latest earnings call, the CEO Sundar Pichai said himself that the show would feature significant product updates and announcements. So investors all around the world are really looking forward to this event, and I think this will be a very volatile week for Google, and if they come out with good product launches and do announcements, the share price may continue to climb to new all-time highs. And if we take a look, this is one of the most fundamentally strong businesses in the world. Jumping over to their income statement, every single year, total revenue continues to grow to over $196 billion of total revenue in the trailing 12 months, and every single year, it continues to accelerate. And if we take a look at their bottom line, this is a very profitable company with $51 billion of total profits over the past year as well. And jumping over to their balance sheet, they are in an extremely healthy financial position with over $135 billion worth of cash on hand and total current assets of over $172 billion. Compare that to their short-term debt of only $55 billion, the current ratio is above 3 and very safe. And overall, the company's total debt on the balance sheet sits at $97 billion. So right now, with the $135 billion cash pile on hand, they can pay off every single dollar of debt and still have around 30 to 40 billion sitting in cash left over. So one of the strongest companies in the world, great income statement, fantastic balance sheet, a ton of future growth coming at a relatively stable valuation, and their latest highly anticipated conference coming up this week. Very interesting time to keep an eye on Google. And going forward, we're expecting 21% annual share price appreciation from Wall Street analysts, and the stock is currently considered a strong buy, coming in at a 1.7, and the share price of $2,278 is below the 12-month expectation of $2,762 per share. So definitely a company to keep your eye on this week, and the first big name we're going to go over in this video. And now if we jump in to stock number 2, we have another tech-based brand, but they operate in the cybersecurity space, and that is ticker PANW, Palo Alto Networks. They currently trade for $336 per share, and over the trailing 12 months, they are up by 53%. The company has a market cap right around $33 billion, and if we take a look at the recent movement, they've actually fallen 15% from the 52-week high over the past few weeks. So now might be a great opportunity to buy the dip in this fast expanding company on a 15% drop. And they're included in this week's episode because the company's reporting their latest earnings on May 20th after market close. And the entire cybersecurity industry is projected to have some massive numbers throughout 2021 because of all the different issues we saw back in 2020. Many of the largest companies in the world are bolstering up their cybersecurity strength. And we can see we have a revenue expectation of $1.06 billion with EPS of $1.29. And over the past 90 days, some mixed reviews coming from analysts, some upward revisions and some downgrades over the past 3 months. But we can see historically they've beaten analyst expectations for 4 consecutive quarters, and we're forecasting around a 10% year-over-year growth in their EPS numbers. And if we take a look at the income statement, they continue to grow every single year. From under $1.4 billion in total revenue back in 2016, they have now grown to over $3.7 billion in the trailing 12 months. And during their latest quarterly earnings, the company actually raised their full year 2021 guidance and are now projecting around $4.2 billion in total sales. And that represent around a 22 to 23% year-over-year increase over the fiscal 2020. So very nice growth coming from this company every single year. And their EPS is projected to come in right below $6 with a free cash flow margin of 29%. And going forward, analysts really like this company as well. And they're forecasting 24% annual growth for the next 5 years in the future. And the current share price is sitting at $336, which is well below the 12-month expectation of $446. And currently, the stock is considered a strong buy. So definitely another tech company focused in the cybersecurity space that's projected to grow over the long term. As we become a more digital-based society, the demand for cybersecurity is only going to grow as more companies shift more of their business online. They're going to need more cybersecurity as well. And overall, the entire system is projected to expand rapidly over the long term. And with cybersecurity, it's not a one-time purchase. That's what people have to understand. When people think about subscription-based revenue models, they really focus on the streaming, like a Disney or a Netflix. But cybersecurity is similar to that model as well. When you get into a cybersecurity firm like Palo Alto and you start using their products, it's very hard for big companies to just stop. So it's kind of a sticky industry where once they're set up, once they're being safe and controlled by one of these companies, it's projected that over the long term, that revenue will continue to flow in to these major firms. So definitely a brand to take a look at. They have fallen 15% from their highs, and they share their latest earnings this week. So now if we continue on into stock number 3, like I mentioned right at the start of the video, all the big retail companies are sharing their latest earnings over this upcoming week. And the one that we're going to start off with is ticker HD, which is Home Depot, one of the largest and strongest retailers in the nation, and I believe one of the few brands that will continue to dominate in-person retail in our e-commerce space world that we live in right now. The nature of Home Depot and their stores, the home improvement warehouse type industry, I think you're always going to have to go in person to purchase your goods. It's going to be very difficult to buy different furniture, tools, or supplies for renovations online from your phone. So I think Home Depot, they already have large stores all across the world. And I think the fact that these companies sell goods that you have to see with your own eyes is going to be very sticky, and individuals will always go in and shop at a Home Depot location. And currently the company trades for $323. Over the trailing 12 months, they've grown by 38%, and they have a market cap at $347 billion. Their forward PE sits around 25, so once again, somewhat reasonable for a fast-growing company with a yield at 2%. And if we take a look, their earnings over this next quarter are projected to come in right around $35 billion for total revenue, with $3.04 in earnings per share. And over the past 4 quarters, they missed once, then followed it up with 3 consecutive beats, and were forecasting close to 46% year-over-year growth in their EPS. And taking a look, they are also one of the fastest dividend growth companies on the market right now, with a yield right around 2%, which of course is on the lower end if you're looking for some income, but the payout ratio is very sustainable, making up only 51% of their net income, and they're growing that payment, averaging 20% per year, which is absolutely phenomenal. So you start off with a lower yield, but your compounding effect is working very rapidly and over 20% annual growth coming from their dividend. And for such a large retailer, they benefited very well from the pandemic because as individuals were forced to spend more time at home, they now had the time and the extra income to actually spend it renovating their homes. And when you renovate your home, where do you go to buy the supplies? Of course, it's the market leader in Home Depot. So we can see every single year, total revenue continues to grow as well. So the company's still growing and expanding with a massive growth rate over the past year to $132 billion of total sales. And if we take a look at their cash flow, every single year, that's expanding as well. And if you want to take a look at business very simply, free cash flow is what really matters. A company's ability to generate growing cash over time is extremely important. And we can see back in 2017, they had around $10.1 billion of total free cash flow, then around 10.6, then over 11, and during the major spike in 2020, they generated over $16.3 billion of total free cash flow. And going forward, analysts are not expecting this company to slow down anytime soon and are forecasting around 8 to 9% annual growth every single year for the next 5 years, and the stock is currently considered a buy and sitting right around the 12-month price target of $330. So if the company shares out latest quarterly earnings and it disappoints over the short term, and it would see a decline in share price, now may be an opportunity to buy the dip on one of the strongest retailers in the country. So Home Depot was the third name in this episode, and if we continue right on into stock number 4, we have ticker F, which is Ford, one of the most recognizable brands in the auto industry. They've been around for decades and decades. They've dominated the market for such a long time, and they're one of the first companies to go nationwide with their vehicles. Currently, the stock trades for $11.84, and over the trailing 12 months, it is up by 142%. That's amazing if you bought the dip back in March 2020 when the shares fell below $5 each. So from that low point, they have absolutely accelerated back up to their current level. And the company currently sits with a market cap of $47 billion and a forward PE ratio of only 11.5. And why they're included in this week's episode is because the company's hosting the first ever reveal of their all-electric Ford F-150 Lightning on May 19th. So doing a live stream event from Ford HQ showing off the new fully electric version of their market-leading pickup truck, which is highly anticipated. And I believe with all the built-up hype surrounding this reveal, Ford will have a very volatile week on the market. Leading up to the event, we may see some anticipation in the share price rise, but if investors are disappointed with what Ford has to offer, we may see a slight pullback in the shares. Or vice versa, if investors love what they see, we may see another spike to new highs on the 52-week chart. But one thing I do want to know is that when you're keeping an eye on Ford, you have to do a lot of research into the company. You can't just buy in with the hope that investors are going to like this reveal. That's because this company does have a lot of debt and they're not in the healthiest financial positions compared to the other 3 names we've already gone over in this episode. And overall, in 2020, Ford did see a major decline in their total revenue, and the balance sheet is carrying a lot of liabilities. And also, the entire auto industry is expected to lose $110 billion in revenue throughout 2021 due to the chip shortage from all the vehicles. And this is not Ford itself, but across the entire global industry, $110 billion of lost revenue, if that is correct, will hurt a major dent into Ford's ability in growth over the next few months. So definitely keep that in mind. This is definitely a riskier play, but we have to discuss them because in every Sunday's episode, we go over all the major events. And when the company who leads the pickup truck market is revealing an all-new fully electric model, that is definitely something noteworthy we have to discuss. And going forward, analysts are forecasting some big growth coming from Ford over the next few years, and the company currently sits as a hold or a light buy at a 2.6, and the share price of $11.84 is just below the 12-month expectation of around $13 per share. So Ford's still below what analysts are expecting, and they're forecasting some growth to come over the next few months. So definitely a company to take a look at. You have to do your own research into this name, and making it very clear, definitely not the strongest or healthiest company in today's video, but worth taking a look at if you want to follow up on the new reveal of the Ford F-150 Lightning, a new fully electric pickup truck to add to their product mix. And now if we continue on into the final stock we're going to discuss in today's episode, it is ticker TGT, which is Target. Like I mentioned right at the start, this is the week of major retailers. And in this video, we took a look at Home Depot and now Target, and those are only two of many big names releasing their latest earnings. Also, just to note, we're not going to thoroughly discuss them in this video, but Lowe's and Walmart are also sharing their latest quarterly results this week as well. So if we take a look at Target, they currently trade for $211 per share. They're up 76% over the past year, and they have a market cap at $105 billion. Currently, they have a forward PE right around 23.7, and they have a yield of 1.3%. And if we take a look, the earnings projection is around $21.55 billion with EPS of $2.14. And if we take a look over the past 4 quarters, they've beaten analyst expectations every single time. And from a weak Q1 back in 2021, we're expecting a major growth rate of 263% in their total EPS. And going forward, the company does pay out a nice dividend with a very, very low yield, but a very sustainable payout ratio of 30%. They grow at averaging only 4% growth per year, so it is on the slower side, and this is definitely not a company you buy for the current dividend income. But what they've proven is that over the long term, throughout any economic recession or depression, not only can they pay that dividend, but they can actually grow it as well with a 52-year consecutive dividend growth streak, making them a dividend king. So remember, this is a stock that you want that long-term share price appreciation, and collecting that small growing dividend is like a little added bonus. And if we jump over to the income statement, for a big company that's already well established, they are growing year over year as well in total revenue. And like we saw with Home Depot, the company saw a major expansion in 2020 to over $93.5 billion of total sales. And jumping over to the future projections, we're forecasting around 10% per year annual expansion for the next 5 years. The stock is considered a buy, coming in at a 1.9 and currently sits slightly below the 12-month price target. So right around what analysts are predicting for the company. So of course, if you can find a pullback, that might be a better time to buy, but definitely worth taking a look at their earnings report coming out later this week. So Target was the 5th and final company we went over in this episode. And now if we wrap up the video, we took a look at 5 different stocks worth taking a look at and researching for the next few days. These are the companies you may want to speak with a qualified professional about, read their annual reports, and learn more about their business models, as they all have a major event coming out over this upcoming week. Google is hosting their latest I/O developer event, highly anticipated with major product launches coming out. Then we had Palo Alto Networks, a cybersecurity firm that has been growing every single year with nice projections throughout 2021, and they're sharing their latest quarterly numbers, followed by Home Depot and also Target, 2 major retailers coming out with the numbers in the week of all the major retailers in the market sharing their reports. And of course, finally, we had Ford, one of the largest and most popular auto manufacturers in the world, coming out with their fully electric Ford F-150 Lightning on May 19th. So a busy week ahead, definitely going to lead to some nice overall market volatility and some brands we're taking a look at over the next few days. So thank you for watching to the end. I am the Gen Z Investor. Please hit that like button, subscribe to the channel, and join the community, and I will see you in tomorrow's video.